What if they don't do a jump? What if they just do like if they get like maybe like a $25,000 whole life policy and um, what can they borrow and how fast can they borrow from it?
So you can borrow up to, so our loan rate's about five, what was it, five, I forget what it is now, 5.3 or something like that. So they would be able to loan up to about 94% of the cash value. And we don't put any limitations on when you can do that.
Okay,
So
awesome.
I
Thank
usually
you.
say, just to be safe, 2 weeks after the policy is issued.
Okay, got it.
So other riders that automatically come: terminal illness, chronic illness rider. Terminal illness, we can accelerate the death benefit up to $1 million, or maximum coverage of 75% if the client is expected to pass away in the next year. The chronic illness rider is for people that are failing two activities of the 2 out of the 6 activities of daily living, but on a chronic situation, so permanent situation. So it's a little bit different than a long-term care rider. And then they can pull out up to $410 a day. And this is how we kind of calculate the amount of chronic illness rider. Probably not too important for you guys to know right now, but it is based on the CASA value and the percentage of net amount at risk, which is the net amount at risk is always the death benefit minus the cash value. So you can't pull out the full cash, or you can't pull out the full death benefit for chronic illness, but you can pull out a good percentage, obviously the cash value, and then a portion above that as well. Loan interest rate limitation rider. So this is the one rider that is not, it's automatically included in only one of our policies. And this is only available in our short pay product, which is our Whole Life Select product. And I love this rider. I think it's great. If you're used to UL contracts, then you probably know an overloan protection rider, and that's what this really is. So what this does is, let's just say your clients are in retirement ages and they start taking out withdrawals up to cost basis, and then they want to continue their tax-free income, so they start borrowing from the policy. If that loan balance was to grow too high, the policy could lapse. And then all of a sudden, that loan balance, which can be a very high amount, is going to be sent to the client as a 1099 as taxable income. Nightmare scenario for most clients. They're older in age, and all of a sudden they're getting a tax bill for a large loan balance. What the loan interest rate limitation rider or overloan protection rider is, if that loan balance gets too big and the policy might lapse, it comes in and basically freezes the policy up. You can't take any more money out, but you've already taken out most of the money anyway, and it will just kind of sit there until the client were to pass away, and then a small death benefit would be paid on that. I love it because it's a permission slip for your clients to take out as much money as they want in retirement without fear of the policy lapsing. Or other policies that don't have this, you kind of have to balance it out so where the policy doesn't lapse. And this one, go ahead, go nuts, take out as much as you want. So I think this is a great policy, and we're only one of 2 whole life companies with this rider on there. So now I'll go over kind of the optional riders that you can add on. These are all going to be at a cost. So waiver of premium, pretty self-explanatory. Client becomes disabled, we'll pay the premium for them. It is what I like to always point out, it doesn't have to cover the insured. It can cover the owner or payer as well. So you have a parent buying a policy for a child, they become disabled, we can put that disability on that parent, and then the policy would get paid for free, basically. Guaranteed insurability options. So this is, for younger clients, this is basically ability to purchase more life insurance basically every 3 years. So there's 9 options. It starts at 19, goes up to age 46. And each of those 3 years, the client could buy another $100,000 of death benefit without any under. Basically buying like a term conversion without actually having to buy the term insurance. And every single 3 years, you can add an extra $100,000 to it. Children's benefit rider. I'm sure you guys are familiar with this, but our max coverage is $20,000. It's a single cost that will cover all children in a family, born or unborn at this point. So, if you have 5 children or 2 children, it's going to cost exactly the same. And that will buy them $20,000 of term insurance for each child. And they can actually convert that to whole life at age 22. And they can convert that up to $100,000 of life insurance. So helps not only, if God forbid a child would pass away, it help with the, any time off the parents would have to take, burial cost, any like that. But then also, obviously, what before as the client lives to 22, we can convert that over to whole life insurance. All right, so now we get into our term riders. And these are things when things get a little little bit more complex. So our first term rider is our blended insurance rider. And this buys a mixture of 1-year term and paid up addition. And I'll go into this a little bit deeper here. So we can convert this all the way up to age 65. So you can actually convert this term insurance to permanent insurance, but it does have to be all or nothing. And we allow up to 3 times the base face value. So if you had a $100,000 base policy, life insurance policy, we can add up to $300,000 of EBIR insurance, or a total of $400,000 of insurance. And typically, which is a great part about it, there's 0 out-of-pocket costs.